So as we know, earnings season now in full swing. We did see some volatility yesterday, but a different story today with the major indices in the green. How much of this is well-founded versus perhaps a little too much optimism, considering headwinds like inflation and slower global growth?
Well, great to be back with you guys. Thanks for having me. I think we got a little oversold. I mean, what do we have? 4 or 5 straight days of the market going down. It can't go down every single day. So it's nice to see a risk-on day. I think that investors have digested the bad news from the banks. By the way, they weren't great. And bank stocks traded down accordingly. But I think people are optimistic about the sectors that are going to start to report. We get the consumer staples, big consumer staple company is going to report after the bell today. I think people are optimistic that that's going to be strong. We heard good news from the housing sector today. So as I mentioned, a little bit of a risk on today, but I don't think we're quite out of the woods just yet.
In your notes, you point out the investor sentiment has plunged from 57% a year ago to 16% today. So take those numbers off the table that we just saw from the markets at the moment. Do you expect just more, general speaking, volatility the rest of the quarter?
Yeah, we do. Unfortunately, I don't think we're quite through all the volatility. I mean, last year was just incredible. We had higher returns, we had low volatility, and we thought that there would be a pivot this year, a pivot to lower returns, much higher volatility, and boy, is that been playing out. We don't think we're out of the woods yet. We expect volatility to continue, but it's nice to have an up day. But, you know, people are still very much concerned about rates going higher. Inflation is really, really hot right now. And it's going to be interesting to see how this earnings season plays out.
How does the Fed avoid triggering a recession at this point is the question that everybody has been asking.
Yeah, Brad. So what you're asking is, how do they orchestrate a soft landing? And it's very difficult to do. It's part skill and it's part luck. And so the skill piece, I mean, I think the Fed and Chairman Powell has that. There is no doubt that they're very skillful. They're very intelligent. They're very smart. Chairman Powell's now into his second term, so he's got the experience. So I'm less worried about that. But the luck part is the big unknown. And the luck part got a lot more tricky with Ukraine and the Russia war. And so supply chains, we're still not back. Commodity prices are going to continue to go up. And so it's going to be very, very difficult to orchestrate that soft landing. I mean, a Fed mistake is one of the biggest concerns that we have, and that will cause tremendous issues with the market.
And you mentioned commodities there, and you say that the decade-long underperformance of commodities is coming to an end. Now, will that only last as long as the conflict in Ukraine, or are there other factors that could really support a rebound that we might see?
So for a long time, I've been asking clients to have a small allocation to commodities, a general basket. So it includes energy, it includes food, and it includes metals. And for the last 10 years, that's been difficult for clients to digest because commodities have really underperformed. But I think it's going to be different. I don't know how long it will last, but I think there's a couple things that are going on. Number one, we've got an infrastructure bill that got passed last fall, $1.6 trillion. I think that's going to be bullish for commodities. I think the war in Ukraine isn't going to end anytime soon. I certainly hope it does, but I don't think it's going to end anytime soon. That's going to put pressure on commodities, particularly energy. So I think that commodities are poised to, there's still room to run, let's just say, as it relates to commodity prices.
And Gene, you favor small caps over large caps. Why so?
Well, I want to just say that the bulk of our allocation to equities is large cap. We believe in the large cap. We believe in playing a little bit of defense right now. So we do overall favor quality over cyclicals and large cap over small cap. I will say that all this talk about deglobalization, though, there could be an opportunity in small caps because of that. Supply chain issues, they're still going to be around for a while. And so I think a lot of companies are going to have this bias to try to establish manufacturing here in the U.S. I think that's all positive for small caps. And if you look at valuations on small caps, I mean, if you look at the S&P 600, it's trading at 14 times. Okay, it's been a long time since we've seen a small cap multiple that low. And so I think from a valuation perspective, it might be time to have a little bit more of an allocation to small caps.